Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, May 15th, 5:04 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, continue to be in a large cap uptrend led by tech. Avoid the drag on the market, which has been happening for over 2 months now, and that's regional banks. But they did show some strength today. We'll take a look at the chart momentarily there. Another reason to avoid those is the large commercial real estate holdings on their books. As commercial real estate, people just don't want to come back to the office after COVID, and a lot of low interest rates resetting. Not a good environment for commercial real estate. So let's check the trend gauge over here. Market leaders, neutral, leaning bullish. Little bit of a change here on the short term, and it's a good change. Small caps had their first close above the 21-day moving average for weeks, and that's a good sign. I commented a second ago about how KRE was strong on the day. That has a lot to do with how weak mid and small caps have been. Dow, on the other hand, continues to lag under the 21, but above the 50-day. So 21-day, we've got one close for small caps above. We got the S&P continuing to do undercut and reclaim of the 21 for 5 straight sessions now, I believe, maybe 4. We'll see when we get to the tail of the tape. And NASDAQ 100 firmly above the 21-day moving average. 50-day, this is the intermediate term moving average. Mid and small below. S&P 500, NASDAQ, and Dow large cap above. Same thing with the long-term 200-day moving average, mid and small below, large cap above. So what happened today? Well, little bit of a mild open higher, and we immediately sold off. And just when things were looking bleak, we had a very strong late morning rally. And just when you got confident, we had an early afternoon swoon. And then just when you worried about that going down, we would trend up into the close. But the bottom line is the numbers here are green, but it should be yellow because we can't break out of this range. So it's not bad. It's good that we close positive, and it's definitely good that the Russell was up 1.2% and regional banks participating in the rally today. But here are the numbers. The numbers are, like I said, until we really break out on the S&P and the breadth improves, we're more in a a neutral market, kind of like the 4 arrows that we show on the trend gauge. So, but on the day, RG7 up 1.11%, seeing some strength in these 7 ETFs. So that's a plus sign for our style of investing anyway. S&P 500 up 0.30%, range less than 1% all day. Tight range continues. NASDAQ 100 up 0.54, Dow up 0.14, mid caps up 0.8, Russell 2000 small caps up 1.2, Global 60/40 up 0.35. Foreign stocks, emerging markets were stronger than the U.S. indexes today, but bonds were globally weak as prices down means yields slightly higher, especially on the long end. So Global 60/40 up 0.35%, in-house GROTECTION up 0.44%. We'll check the tail of the tape, some charts, and then we'll go through how we do our position sizing calculation when we own something that's going into earnings. So let's get to it. And of course, we'll start with the S&P 500 here. The green line, you can see this is what has been tested. Okay, so it's 4 sessions now that we undercut, then closed back above. Let's go to a 5-minute chart here. You can see how jagged things were. Nice gap up. No, we're selling off. No, we're rallying. No, we're selling off. No, we're rallying. Strength sold, weakness bought continues to be the mantra, and that is within this tight range, 4,100 to 4,155. that we've been trading in for 7 days, including the first day that we got up into that range, which was the gap up after Apple earnings, which came after the apocalyptic feeling of a hard sell-off on the Fed and a bad day the next day, a gap down that wasn't filled. But this is when Apple earnings got us back into this range that we're currently in right now. So there's your S&P 500, there's your tight range. Let's go to the NASDAQ 100, which continues to lead, riding the ADMA higher, making a higher close from this recovery. Note the relative strength over the last 2.5 going on 3 weeks. Let's go to the Dow, which is being held down by United Healthcare and Goldman Sachs. Uh, Here's the Dow bouncing off the 50-day moving average again. Third day without even touching the 21 EMA, which has now rolled over. Let's get to mid caps now. A little bit of relative strength here today. We closed just below the 21-day moving average, 2/10 below. And it's been 2 weeks since when was the last close? So this was the attempted break above the 50-day on May 1st. That was the last time we had a close above the 21 EMA. So 2 weeks. But then you've got small caps here where we finally got a close above the 21. Intraday, we tried to get above it on 5/2, but really the last time we closed above was back on 4/24, so over 3 weeks ago. So good to see that. Yes, ran into the declining 50-day and paused there. So a move above today's high would be a break above the 50-day moving average, which we hadn't seen since this crisis started in the first place at the beginning of March, with the big move down based on, stop me if you've heard this before, the regional banking uh, liquidity crisis. Let's go to those regional banks now. Up 3.2% on the day. First close above the ADMA in 2 weeks, since 428, 2+ weeks. So maybe this was the final shakeout here with PACW. This was the 5/3 was when Powell said the banking system is strong and resilient. After hours, PACW said, hey, deposits are fleeing. It had a massive gap down the next day. Let's go to that. But PACW up 18% on the day. And this was the day it bottomed on 5/4 when it was down 50%. Made a couple of runs since then, but trying again. First positive step for this would be a close above the 8 EMA. But for now, the banking crisis is being set aside, and the focus is really on what's going on with the debt ceiling. So there's more meetings tomorrow on Capitol Hill, and before the president goes, I think he's flying to France or something like that. But neither side is optimistic, and they'll wait until they can't wait another second, because nobody's proactive in Washington. It's just a big battle of political egos. PACW. Let's look at XLF, because this factors into the banking confidence model. Closed right on the ADMA. Every time we've tried to get above the 21 over the last 2 weeks, we failed. So a move above 33 would get us above the 21 and above the 50-day moving average for the financial sector, and that would be a positive sign. Let's go to the dollar. I noted on Friday that the dollar broke out of a range, which was concerning for me. Let's go to a 60-minute chart. Pulled back today, but still an inside day relative to this range breakout, and back inside the high end of the range going back to March 24th. If you look at it on a daily chart, really there's two ranges on the daily chart. This lower range, which is below the 28 level for the UUP, and this upper range, which is here, it's really 28 to 2870-ish. So inside day today, don't want to see strength in the dollar. That hits precious metals. That is generally negative for stocks. But the pullback today, 1/3%. is what the bulls want more of. But note the 21 EMA has curled higher, and we've been above it for 4 of the last 5 sessions. So yes, definitely something to still pay attention to. Let's flip to the VIX now. Got above the 21 intraday, but as we rallied in the afternoon, it pulled back below it. This is this is where we want the VIX to be, low volatility under 20 and under the 21-day moving average, the 20 level and the 21-day moving average. Let's flip to bonds now. BND, the broad bond index, down 0.26%. So we're going from the top of the range in price toward the bottom third of the range for price. That means that you'll see the opposite on yields when we get there. Here's the TLT back toward the bottom part of the range for the long bond yield 0TYX up to the top of the range of the yield, and TNX, the 10-year, up in the upper third of the range there also. Now, precious metals, which had a bad close to the week last week, but really just the stocks. GLD continues to hold the 21 EMA tight range today, up slightly. SLV hanging at the 50-day moving average here after the big gap down on Thursday, and stocks, gold stocks, uh, ran into the declining 21-day moving average and were rejected. Need to get back above that, as that was the level that we held while we consolidated, had a strong bounce off of. This was the slingshot, 3-day slingshot, ran into the top of the recent range and failed. 5 down days then, uh, down to the bottom of the range around this 33-ish area. A little bit of a bounce today, but below the 21. And finally, Bitcoin got back inside its range today, up almost 4% on the day. Let's go to the 60-minute. The 16 range was on the bottom end, 18 on the top end, failed break above, now failed break below. Well, actually, it was rejected at 16. I got the alert today that we were above it, but by the end of the day, back below it. So those are the major inter-asset correlations that we track. Let's go to the tail of the tape now. Uh, 4 out of the 5 major indexes have the stochastics positive now. Only the Dow is negative. All the RG7 are positive. We want to see NASI RSI hooked back down, but it's been battling between up and down, so basically neutral. We want to see after that doesn't update until on stock charts until after 6 p.m. So we're at neutral for there. A little bit of news before the market. The Empire State Manufacturing was a huge miss, down 31.8 versus expectations of minus 1.8. The futures were up about 1/3% before this came out, and they sold off quite a bit. We were up only 0.1% at the open and continued to sell off early before putting in the bottom for the day. Day count, 7-day consolidation now. First day back above the 80 EMA and 7 above the 21 EMA for the S&P 500. Here's a stat. We've been talking about how earnings have been better than expected. 90% of the S&P 500 have reported. Their actual earnings per share is a 2% decline, but the expectations were for a near 7% decline. So quite a bit of outperformance there. One of the reasons why the market has been holding up. Our expectations remain positive as long as we stay above the 21 on the S&P and the NASDAQ 100. Here are the sectors that were up and the sectors that were down. The only sectors down were defensive sectors, XLP, UV, and RE. That's staples, utilities, healthcare, and real estate, along with the dollar and bond prices. Here's our focus list. Only one trade today. We trimmed ONON back to within our risk tolerance going into earnings. So that was the only trade that we did, and I want to walk through this very quickly. So how do we determine what we're going to hold into earnings? Well, first of all, we have to have a gain in the stock. We have that on ONON, bought it after the last gap up on earnings. So the first thing that you need to know is how much are you willing to risk on the roll of the dice that is an earnings report? And for us, we don't want to lose more than 1% of the overall portfolio if we would get a 2 times expected move to the downside in the stock. So, uh, everything that goes in every um, ticker before it reports earnings, there's something called a market maker move, which is the expected move either up or down based on the volatility of the stock. So here's where we started the day. We closed at a 4.95% size on Friday, and it was priced at 32.87. So in order to stay within this 1% max loss, the expected move for ONON would have had to been 10.4% or $3.30. So that would have left our size okay at 4.9% because a 2 times loss on that would have been a 0.99% over loss to the overall portfolio. So we didn't need to reduce anything. After we started trading this morning, we saw at around 33.20, the expected move was $3.80. That's 11.45%. So now our calculation is telling us that our maximum size needs to be cut down to 4.37%. It says reduce. You need to reduce your current size uh, by 1 minus 0.58 or 58 basis points. So in other words, we need to take it down from 4.95 size to 4.37 size. So we did a sale on that, reduced the size, got us down to 4.35%. Then later on in the day, the expected move started ticking up. So by closer to the close, when we were trading at 33.44 with a 4.35%, the expected move ticked up to 4.2%. So this is telling us that uh, at a 2 times to the downside move on that, which is about the worst that you get on high growth stocks. So we're trying to be defensive as always. Uh, the maximum size was now down to 3.98%. So it's telling us we need to sell off a little bit more of our size, which we did right before the close. So as of right now, going into tomorrow morning's earnings report for ONON, we've got basically a 4% size. The expected move is $4.20. We get this from Thinkorswim based on options volatility. If it moves 2 times that move to the downside, we will lose, it'll be down $8.40 or 25%. So 2 times the current move, the current expected move is 12.56%. And with a 4% position, that'll hit the portfolio, but only by 1% to the downside. So basically, we cut our size from basically 5% to 4% based on the implied move of ONON into earnings and protecting our downside in case it makes a 2% to the downside move. And you do see this with high growth stocks. I'm not going to say it happens a lot, but it happens, and we want to be prepared for it. If earnings come out and there's no volatility at all, we can get our size immediately right back. You can always buy it back, but you can't recover from big losses from a gap down. So um, we're ready now for tomorrow, and that's the calculation that we go through. So the tail of the tape, we've got our focus list here. So bottom line for today, continued tight action, dips being bought, but strength being sold. KRE at least showing a little bit of confidence, semi bit of confidence, we'll say. So here's what we want to look at. First of all, we'll go ONON, which is going into tomorrow. This is the gap up that we initially bought, and it's obeyed the 21-day moving average the entire move. Um, if you look at a weekly chart, I've been talking about this for a while. It's got a very nice uptrend line that it's been obeying. So a break of that would very much be a sell signal. We'll see what we get out of earnings tomorrow morning from ONON. What else do we want to focus on? Semiconductors had a really good day today. They started out weak. As the day went along, we saw them strengthen throughout the day, and semiconductor equipment companies, so you can see here, um, opened up basically flat and then just started trending higher, showing some serious strength. So this is what we want to focus on today, and we saw some good stuff out of LRCX, semiconductor equipment companies. Uh, these are the companies that sell the equipment, make the equipment to be sold to the people that manufacture the semiconductors themselves. So if the market is showing confidence in the equipment makers, that trickles down to the companies that actually design and create the semiconductors, and it's a good sign for the overall economy. So LRCX, good setup there at the top of the range. AMAT, Applied Materials, nice move up today, getting up to the top of its range. KLAC, this is KLA 10 core, also a nice move today. ASML, this is a European stock, still forming a nice uh, tight consolidation, really the handle, and trying to get back some of the losses since its earnings reports. Uh, and the two that we own started slow but had good days. Nvidia back to the top of its range, and AMD, after being rejected at the 100 level, came back and bounced off the 80 MA today. So good setup there too. A couple of other stocks. First of all, Shockwave. This had a bad day, down 6% on 73% above average volume. Didn't see any major news on this, but there has been talk about a possible buyout for them by at least one different company. And that's what set when you're dealing with a possible buyout, a company that's possibly being acquired. This first gap up here in early April was the first speculation on it. Then there was more speculation on 421 that Boston Scientific was considering buying it, and then there was more speculation last week about being bought. So you don't necessarily have to have a news headline for a stock that's involved in a possible acquisition. Insiders know if it's going good or if it's not going good, and that trickles through the industry. And there are secrets that we're not privy to. But bottom line is, it did stop at the 21-day EMA. Today's low, below a break below today's low, uh, would, for me at least, be a sell signal. We don't own any of it, but somebody emailed us and asked to talk about that. So there's Shockwave. AI raised their sales forecast. So if we go back to this failed breakout on AI back at the end of March, and then a big move down, 26% move down on AI on 4/4 when a short seller came out accusing them of shady accounting, and the stock didn't recover since then, but was supported at the 200-day moving average. Well, today they came out and upped their sales guidance, and the CEO was on CNBC. The CEO is a highly thought of tech CEO from back in the day, Tom Siebel, and you can just see the little gap up, and it was just bought all day long. Any dips bought. So money flowing back into AI. So I guess the way the game is played now, we wait for the short seller to come back out and accuse them of accounting fraud again, and see where it goes from there. But for now, the ball was in the court of the short sellers. We bounced off the 200-day moving average, and the bulls got the ball back today with that move. A couple of other strong moves today. Shake Shack, an activist investor. Um, Look at the nice move they had since earnings. And then today, an activist investor came out and said they want board seats. They've got a plan to really accelerate their growth. And the stock gapped up again and held it up 7.8% on the day. Follow up from strong solars last week. Array didn't do much around its earnings report, but then First Solar had a monster move on Friday, and Array tagged along, and Array followed through to the upside today. So this is filling out the right side of this base. First Solar, on the other hand, after that monster move on the acquisition of a European company that they did, one of the big companies came out and downgraded them today on valuation. So it sold off 4.3%, but that's a mild dip compared to the big move that it made, 26.5% move up on Friday. And we'll see what cards the market has to deal tomorrow. So remember, it's not how much you make in the market, it's how much of that you can keep. That's why at Revere, Very similar to the way we size positions going into earnings. That's just part of our hallmark for protecting the downside, and we let the upside take care of itself when the market is acting in a healthy manner. Last thing you want is if you've got accumulated a nice nest egg, and we've seen this happen to friends and family when they had their money with pie chart pie chart advisors that don't protect the downside. These big losses can hit you, and you just don't have time to get back to them going into retirement. So we protect the downside first, and then let the gains take care of themselves in the proper environment. And if you're interested in this approach, reach out. You can email me, don@revereasset.com, or my partner, Dan Stewart, dan@revereasset.com. The phone is 855 Real Wealth. That's 855 732 5932. So, with that, I'll wrap up Monday, May 15th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great day.